Welcome to the Crypto News Recap podcast, your go-to source for all the latest updates in cryptocurrency. Join us as we discuss the most important news, trends, and developments in the world of digital currencies. Don't forget to subscribe to our podcast to stay up to date with the latest crypto news. In today's episode, we'll cover the SEC's legal action against Coinbase and Binance for unregistered exchanges and securities, Optimism's Bedrock upgrade, SEC Chief Gary Gensler's stance on digital currencies, and the market response to the SEC's lawsuits, with Bitcoin and Ether prices rising despite the crackdown. Have you heard the news about Coinbase, a major US cryptocurrency exchange? The US Securities and Exchange Commission, also known as the SEC, has filed a lawsuit against the exchange. The agency alleges that Coinbase violated federal securities laws by functioning as an unregistered broker, exchange, and clearing agency concurrently. The suit doesn't name any executives at Coinbase, but it does target Coinbase Inc. and Coinbase Global Inc. as defendants. In response, SEC Chair Gary Gensler claims that Coinbase's supposed failures deprived investors of important protections against fraud and manipulation, as well as safeguards against conflicts of interest. Coinbase's chief legal officer, Paul Grewal, responded to the lawsuit by calling for crypto-specific legislation to be developed. Grewal criticized the SEC's enforcement-only approach, especially in an industry with unclear rules for digital assets. He emphasized the need for legislation that allows for fair and equally applied rules to be transparently developed, rather than resorting to litigation. The SEC alleges that Coinbase's Prime, wallet, and staking products, as well as the tokens it listed, violated federal securities laws. As a result, not only did the entire cryptocurrency market see a decline, but Coinbase's pre-market stock price also took a hit. The SEC's ultimate goal is to permanently prevent Coinbase from further violations and have the exchange pay disgorgement and civil penalties. That's the update on Coinbase and the SEC's lawsuit. As always, stay informed and make sure to do your own research before investing in anything. The United States Securities and Exchange Commission, also known as the SEC, is cracking down on the cryptocurrency industry by taking legal action against two of the largest digital asset platforms, Binance and Coinbase. The SEC is accusing the platforms of operating unregistered exchanges and offering the sale of unregistered securities. Essentially, the SEC believes that almost every business activity these platforms perform should be registered with the SEC and held to securities regulations. What's become clear is that the charges leveled against Binance and Coinbase could extend to other industry players if the SEC is successful in court. In fact, Joshua Ashley Clayman, the US head of digital assets at Linklaters LLP, believes that the SEC's actions build on previous enforcement actions against other digital asset market participants, providing a comprehensive map of how the SEC views the cryptocurrency landscape and its various components. SEC Chair Gary Gensler has been particularly vocal about his concerns that cryptocurrency firms offer one-stop services that could create conflicts of interest with customers. Specifically, the SEC is targeting businesses that offer services as exchanges, brokers, dealers, and clearing agencies without registering as any of those entities in the US. Despite these allegations, companies in the sector, like Ripple, are choosing to challenge the SEC's charges in lengthy court battles. The allegations made by the SEC strike at the core components of these businesses, which is why Binance and Coinbase have expressed their intentions to defend not just their own business, but the industry against what they perceive as misguided actions from the SEC. It remains to be seen how these court battles will play out and what impact they will have on the cryptocurrency industry moving forward. Hey there! Exciting news for all you Ethereum enthusiasts out there. Optimism, a Layer 2 scaling solution for Ethereum, has just completed its Bedrock upgrade. This is a significant milestone for the blockchain, as it brings us closer to achieving the goal of becoming a superchain of interoperable mini blockchains. So what exactly does this upgrade entail? Well, the Bedrock hard fork aims to enhance the functionality of the chain by drastically reducing deposit confirmation times from 10 minutes to just 1 minute. And that's not all. Gas fees are also set to decrease by a whopping 40%. This could mean a dramatic improvement in the overall user experience on the platform. But that's not the only thing this upgrade has in store for us. It also improves proof modularity for Optimism's OP stack. This nifty open source platform allows developers to build customizable blockchains with Optimism. With the upgrade, both validity proofs and fault proofs can be utilized. In addition to these upgrades, the Bedrock upgrade also transforms Optimism into a multi-client ecosystem. This is huge news that could enhance the reliability of the blockchain by reducing the chances of network downtime. In fact, Carl Floersch, the the CEO and co-founder of OP Labs, suggested that this would make Optimism the first Layer 2 solution to run on a multi-client ecosystem. And last, but certainly not least, the native token for Optimism, $OP, has seen a significant rise of 10% over the last 24 hours following the Bedrock upgrade, a clear indication of a positive market response to this development. All in all, this is a huge step forward for Ethereum's Optimism. Stay tuned for more exciting updates in the world of blockchain technology. Have you heard about the recent developments in cryptocurrency regulation in the US? It looks like the chief of the Securities and Exchange Commission, SEC, Gary Gensler, doesn't believe the US needs more digital currency as it already has the US dollar. This came as the SEC took legal action against Binance and Coinbase, two prominent cryptocurrency exchanges, for allegedly operating unregistered securities exchanges. Gensler defended his approach, stating that it wasn't creating confusion about the legal status of cryptocurrencies. He pointed to the cases against Changpeng CZ Zhao, CEO of Binance, and Sam Bankman-Fried, founder of FTX, who is currently facing a criminal case showing similarities. The SEC's lawsuits against Binance and Coinbase are based on accusations that they provided services, such as brokerage and clearing, on regulated securities. Gensler plans to argue that the numerous tokens tradable on these exchanges are more like investment contracts that should have been registered with the agency rather than simple means of payment. Gensler noted that the crypto industry must improve its compliance and disclosure for its continued success, warning that without doing so, it risks collapsing like a house of cards. He believes there has been clarity in securities law for years and that intermediaries must comply. Gensler's comments suggest a firm stance from the SEC on cryptocurrency regulation, and it indicates the potential for further regulatory actions in the sector. It remains to be seen how the crypto industry will respond. There's been a lot of buzz lately about the Securities Exchange Commission, SEC, filing suits against both Binance and Coinbase. They've even characterized plenty of crypto assets as securities. So you might expect the crypto market to be tanking, but that's not totally the case. Interestingly enough, crypto assets are still being treated more like commodities rather than securities. Even with the lawsuits having a significant impact on both Binance and Coinbase, Bitcoin and Ether are actually up over the past 24 hours. Bitcoin is up 5% and Ether is up 4%. Sure, the exchanges are feeling the pain. Binance's net transfer volume has already declined quite a bit and Coinbase's shares opened 20% lower. But the 13 altcoins named as securities in the lawsuits haven't declined more than 3%, and some have actually been trading higher. This suggests something important about Bitcoin and Ether. According to one article, the two have recently decoupled from both traditional financial indexes like the S&P 500 and from other crypto organizations themselves. In other words, their price movements are more in line with physical commodities like oil or gold. This implies that they are seen as independent of the platforms that distribute them, emphasizing their intrinsic value rather than their association with specific entities. Plus, their price movements seem to be more affected by supply and demand dynamics like traditional commodities. The market reaction suggests that crypto assets, particularly Bitcoin and Ether, continue to hold value regardless of actions taken against individual platforms or entities like Coinbase and Binance. By continuing to view them as valuable, many investors are also suggesting that any attempts to eliminate these assets would be seen as overreach. On today's episode, we covered the SEC's legal actions against Coinbase and Binance for operating as unregistered exchanges, the Bedrock upgrade from Optimism that enhances scalability and functionality of mini blockchains, as well as SEC Chief Gary Gensler's message to the industry. Despite SEC lawsuits, Bitcoin and Ether prices have risen. Thanks for listening to today's episode. I'll see you guys at the next one, and don't forget to subscribe.